Personal finance practice problem using Excel. Accounting equation. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. Information's up top. We're going to be populating that into the blue areas, working on our accounting equation. As we do, remember that the accounting equation is like the top line of grouping of financial data that we can group together into an equation type format. The primary two things we can think about are the assets and the liabilities, and we've been focusing on the fact that the net worth is basically the difference between the assets and liabilities. It's useful to see this relationship and really kind of understand it conceptually because it helps us to construct the financial statements and then think about the financial statements once constructed. So note that this basically lines up to the balance sheet here when we look at assets, liabilities, and equity, or in this case, we're going to call it net worth. If it was a business, it would be called equity. That last line, by the way, is kind of the most confusing just because of the name. If it was a corporation, it could be called stockholders' equity. If it was a sole proprietorship business, it might be called owner's equity. If it was a partnership, it'd be called partnerships equity or partner's equity. And if it's just an individual, if it was a nonprofit, it would be called something similar like net assets or something like that. And then if it's basically a personal, we can simply call it the net worth, basically assets minus liabilities in that sense. It's useful. It seems kind of basic to look at this, but it's useful to get this idea down because that helps us to basically see how the financial statements are created and also to actually read the financial statements a lot better. You'll note that the income statement isn't really tied into this, but the income statement is part, as we talked about before in a prior presentation, it's part of kind of like the equity or net worth section, meaning the net worth is in essence the bottom line number that can tell us where we stand. And the income statement is the activity that's the change between prior period and the current period. So it's kind of like the story behind the net worth, at least for a certain period back, like 1 month back or 1 year back. Also note that when you're looking at these here, this accounting equation, this is one way you can think about how you record financial transactions. Usually if you're recording financial transactions, doing something like entering the data into like a QuickBooks or something like that, we first start off learning about the accounting equation. Then we move to basically debits and credits, which is a little bit more abstract format of a double entry accounting system. So for financial recording purposes, it's useful to have an idea of the accounting equation as well. So if we're given our data here, like assets and liabilities, these are the top line groups. These aren't actual accounts. These are groupings of the accounts. Assets, of course, things we own. Liabilities, things that we owe third parties to. The difference is basically what is due to us. So the most basic format of this equation would be we know the assets, we know the liabilities, and now we're backing into the net worth, which is the difference between the two. Also, just realize that when you look at these two formats, the classical accounting format of this would be assets equal liabilities plus equity in an accounting equation standpoint. And you can reformat that algebraically by subtracting liabilities from each side, and you would get assets minus liabilities equals equity or net worth, same concept that we're working with here. This second one is the one that is more intuitive to most people when you're trying to use financial statements. The first one is the basic accounting equation from an accounting data input standpoint, and that's because it reflects basically kind of two sides to the coin. The assets representing what the company has, and then the liabilities and equity or net worth represents who has claim to those assets, right? Either some third party or you, the owner, has claim to the total assets that you have. That's why it makes sense to break it out in this format from like a data input standpoint. From this format, it makes sense because it emphasizes the bottom line, which you might think of as the bottom line of the balance sheet, which would be the net worth, which would be the assets minus liabilities, focusing in on our net value, that being the net worth. So if we're given this data and you're asked to find like the unknown component, we can use our algebra, of course, to do that. I like to actually just list things out in this accounting equation in a vertical format when I only have a very basic equation. And that way I can just basically, I can solve for the unknown quite easily if I list it out vertically. So a common question would give you, say, assets and liabilities. I would list it out vertically, assets, liabilities, the difference being net worth. This equals, in other words, 48,000 minus that 19,300. That's going to give us the 28,700 net worth. The total assets that we have, 48,000. We owe somebody, third party, the bank, whoever, 19,300. That means our net worth, what we net have, or net value from a financial perspective, is 28,700. You can also, of course, do that in an algebraic format this way. You might think of it, write it out this way if you're doing it on a piece of paper. Algebraically, we say assets of the 48,000, and that equals the liabilities are 19,300 plus the equity, which I can calculate then if this is the case, right? Assets equal liabilities plus equity or net worth. Then I can back into the net worth, solving for x, this being x, mean 48,000 equals 19,300 plus x, and then subtract 19 from both sides, and you would get then 48,000 minus the 19,300, giving us the 28,700, which if you select these two cells, you could double check here and say, yep, that adds up to the 48,000 here. You can also see it this way. You might say, all right, well then assets, let's do it this way. Assets equal to 48. I'm going to say minus liabilities. Maybe I'll put the liabilities here as a negative number and show them as a negative. So assets minus the negative liabilities equals the net worth. I'm going to use my sum function to add these two up, which will subtract because that's a negative number. So I'm going to say equals the sum of these two, and that's going to give us our net worth again in like a horizontal type of format. So however you want to format this, you can work with it. If they give you, if a book problem, for example, said, this is what my assets are and this is my net worth, and then I had to back into my liabilities, I would still list it vertically oftentimes, say assets minus liabilities equals net worth, and then just say that's my unknown. If this minus this equals that, then I could say, well, this has got to be equal to the 98 minus the 27, and then I could basically double check it, down here I could say, all right, does that work? This minus this equals the 27. Or you might write it out this way. You might say, okay, well, assets equal liabilities plus equity or net worth. Assets are now 98,000, and then they gave me the equity or net worth, which is 27,000. And if I look at it this way, I've got, all right, assets equal X, liabilities plus 27,000. If I solve for X, then it's going to come out to be that I got to do a subtraction. So this is going to be the 98,000 minus the 27,000. And we get to then that 71. If I sum these both up, that adds up to 98,000. We might see it this way. You might say, all right, they gave us the assets. I'm going to put the net worth over here at the 27. So now I'm thinking, okay, assets minus the liabilities equals the 27,000. If this was X, then again, I'd solve for X here. And I'm going to try to get a negative number. So I'm going to say this equals the smaller number minus the bigger number. And that's going to give us our 71 again. And if I sum those two up, I get the 27,000. So you might see it that way. This one, if they give us, once again, the assets and the liability, this would be the most common way that you would construct something. If you had the assets and liabilities, I would list them out vertically. Assets minus liabilities equals the net worth. You have your little mini balance sheet right here. And so you just say, this is going to be the 38,400 minus that. That's going to be the 24,100. Or you might see it, want to write it out algebraically in the accounting equation format, which would be assets equal liabilities, which we know, plus equity, which would be X. And then you can say, okay, assets equal 38,400 equals 14,300 plus X. I got to subtract 14,300 from both sides, which would result in a subtraction problem of 38,400 minus 14,300. That would be the 24,100. If I add these two up, selecting them, it gives me the nice sum function down here in Excel, 38,400, which is correct. I might see it this way. I might say, what if I want to plug it in algebraically, horizontally, 38,400, and then I'll make this a negative 14,300. And I'm going to sum these up, which will subtract them because I put a negative number there, equals the SUM of those two. Gives us the 24,100. If I select these two, yes, indeed, it gives us the 24,100. And lastly, if they don't give us the assets and they give us the liabilities and our net worth, and then I'd list it vertically and say, okay, I'm going to solve for the unknown up top. If this minus this equals that, then I'm going to have to say that this is going to be equal to this plus this, right? And then you can double check it and say, does that make sense? Because this minus this equals that, right? You can kind of double, or you might want to write it out algebraically. You could say, all right, well, let's see if I put it in algebraically. Assets, I don't know my assets, so we're going to say this is going to be the liability, 41, and we know the net worth or equity, which is the 63. And then if I say assets equal liabilities plus equity, then I can just sum these up to get to the assets. That equals the sum of these two. There's our 104. Or I might do it this way and say, okay, assets minus liabilities, but do it algebraically. We don't know what the assets are. We know the liabilities I'm going to put as a negative of the 41, and that equals the net worth, which is going to be equal to the 63,000. So I'm going to back into this. This is a little funny because I'm going to use a double negative because I put that in there as a negative. So it's going to be the 63 minus the 41 to give us to the 104. If I select these two, 104 minus 41 gives us, of course, the 63. So you might see that multiple, you can, however way you visualize that in your mind, you would like to visualize it multiple different ways, meaning you'd like to see it vertically in a little balance sheet format. You'd like to understand the accounting equation, assets equal liabilities plus equity, because that really gives you insight into basically the two sides of what's actually happening here, the assets, and then the other side, who has claim to those assets. Either some other person, third party, the bank possibly, or you, the net worth. And then this way, which emphasizes, of course, the net value, what you would think of as the bottom line, and then be able to work your algebra to work, back and forth between this accounting equation. Once you have that, once you understand this net worth, then you can move from period to period, meaning what's my net worth now? What's my net worth last year? What was my net worth last month? And you could see the change from your net worth to your net worth, which in essence is basically kind of like the income statement. That's the activity showing you going from one period to another. In other words, if this was month 1 and this was month 2, this net worth is where you stand month 1 and month 2. How did you get, what happened between month 1 and month 2? That's the income statement. That's the activity. That's the inflows and the outflows.